Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and if you're new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic that is accounting journal entries. We are going to understand this in a detailed format, but what exactly this concept is all about, that's what we need to get into the nitty-gritty. Now, an accounting journal entry, it's a formal recording of the transactions where what happens, debit and credit of the transactions are recorded in the journal ledger, and this is a written record of the commercial transactions. Now there are some types of accounting journal entries. We are going to study each and every one of them. First is the transaction entry. Transaction entry is the basic amount, basic account entry for any event in the business. Like for example, let's say there is bill receipt from a customer and the bill presented from a supplier for payment. So cash receipts entry from a customer and other cash payment has been done, which is an expense for them. So transaction entry in cash basis and accrual basis. Second, there is a thing called adjusting entry. Now what exactly this is? See, adjusting entry is a journal entry done at the end of the accounting year or the accounting period, what we can say that. Now it is based on the accrual basis of accounting. Right, see, the accounting journal entry is required at the end to adjust various balances in the various ledger accounts, which is done to meet the financial position of the business as per the accounting principle. Like, let's say GAAP, that is generally accepted accounting principle. So in short, it is basically align reported results. The third in with us is the closing entry. See, closing entry is basically a journal entry and which is done at the end of the accounting period. So this type of entry is posted to shift ending to retain earning account from all the temporary accounts. Like, you have loss account, gain account, expense account, revenue account. So this is done to what we call as transfer information to the extent to the next accounting period. So accounting entries for the transactions are done through what we call as the accounting software, and where one doing transaction will know he is creating an accounting entry. Example, like, creating customer invoice. Accounting entries, they basically record all the commercial transactions very form. Now there is a system of accounting journal entries. Now how does this go? The first is single entry accounting. Now the term single entry is vaguely used to define the method of maintaining the accounts, which do not conform to strict principles of the double entry. So it is not wrong to define into a system. The term single entry does mean that there is only one entry. There is only one entry for each transactions. So the absence of the two-folded, you can say that two-folded effect of each transaction makes it really very impossible to prepare a trial balance and to check arithmetical accuracy of the books of accounts, endangering the a spirit of laxity or inviting frauds or misappropriations. So that may be the case. Now the profit and loss accounts and balance sheet cannot be separated due to the absence of the nominal account. Okay, and hence a single entry is not only incomplete but the final result is also not reliable. So this system typically tracks only the what we call as the cash receipts and cash disbursements. Okay, and it shows only those results that are needed to construct income statement. Now there are some advantages of single entry accounting. The first one, the single entry system is very simple and less expensive. Second, a professional person is not required to maintain, or you can see a professional person is not required to maintain any sort of single entry system accounting. Third, it has what we call as the summary of daily transactions, like incomes and expenses. Now let me talk about some disadvantages. See, the disadvantage of the single entry is that there is a lack of data and may adversely affect planning, controlling of the business target goals. Second, there is a lack of what we call as control on different issues which company may face. And third, in case of any loss or theft, one will not be able to find out, or won't be able to find it through the single entry accounting system. So let's take an example of single entry system. The example of the single entry system is here. We have a couple of dates, income, expenses, whether it is inventory or salary, wherever things have been recorded, it's here. So hence the entry of the single entry is done on each and every transaction. Like, on 1st April, the balance was this, expenses this happened, or on this particular lines, on 4th April, raw material was been purchased, and so on and so forth. Other entries are been given. So this was the first example of the single entry system. Then we have a thing called double entry system. Double entry bookkeeping system. So this is used to make the debit credit entry system, which eventually leads to creation of the complete of the financial statement. So according to the book entry system, every transaction has two elements. One is called the debit, that is when something is going, and another credit, when something is coming in. So in simple language, what comes in is credit, goes out is your debt. So this is the main concept of the double entry system. Now let's talk about the advantages of the double entry journal entry system. First, what you will need is you will need a complete record. You will need a complete record on this. Let's try and evaluate that. Now, double entry system enables the businessman to keep a complete, systematic and accurate record of all the transactions. A detail of any transaction, the events can be verified at any time. Right. Second, ascertainment of profit and loss. Right. So the systematic record maintained under the double entry system enables a business to ascertain the results of business operations for any given period of time. So the owners can know the profitability of the business operations periodically. Third is the knowledge of financial positions. So with the help of the real and personal accounts, the financial positions of the business can be ascertained with accuracy. This is done by preparing what we call as the balance sheet. So under the double entry system, every debt has a corresponding credit. So arithmetical accuracy, the books can be tested by preparing a statement called trial balance. It is known as trial balance. And there is no scope of fraud over here. The firm, is saved from frauds and misappropriations, since full information about all the assets and liabilities will be available. So there are tons of details that goes around in this particular topic. There's no just one thing, but there are tons of things. I'll just give you a short example. Let's say you purchase a machine by cash. So machine is over here is going to be a debit case, right? Because that's machine is coming in, and what is going out, that's cash. So that will be credited. And every entry of the financial system for the same will show something like this. Let's say you bought it for $5,000, so the entry will be recorded like this. So that's it for this particular topic. If you have learned and liked the video, if you think that if you have enjoyed and learned watching this video, please like, comment on this video and subscribe to our channel for all the latest updates. Thank you everyone. Cheers.